Hey everyone, and welcome. We're diving deep into Dubai's real estate market today.
Sounds exciting.
It is. We've got some really cool stuff to unpack.
Yeah.
Yeah, we've got excerpts from this book called Dubai Property, A Guide to the Market by Michael Waters.
Oh, he's great.
He is. He really knows his stuff, and we've got some fresh data from a property research website.
Nice.
Yeah, so we're going to explore, like how Dubai's real estate has evolved over time, what's driving this market, and what are some potential investment hotspots, for anyone looking to get involved.
It's amazing how Dubai has transformed from a trading post to this global real estate hub.
Yeah, it's a pretty wild story, right?
Yeah.
Ambitious projects, constantly evolving regulations, those crazy boom and bust cycles.
Absolutely.
So let's rewind, back to the 1970s,
Okay.
when Dubai started those huge infrastructure projects, Port Rashid, the Dubai World Trade Center.
Yeah.
I mean, those must have been game changers, drawing in foreign investment, attracting people who wanted to be part of this, like rising city.
For sure, those projects laid the groundwork for everything that came after.
It was like setting the stage, right?
Exactly.
But then things really took off in 2002 with Dubai's first real estate boom.
Oh, yeah. 2002 is a big year.
Huge. That's when Dubai introduced freehold ownership for foreigners, remember?
Oh, yeah. I remember.
Like in designated areas. So suddenly foreigners could own property outright.
Big change.
Big change. And, combine that with a global credit boom, oil prices were going crazy.
Perfect storm.
It was. And suddenly Dubai became this synonym for luxury developments. Prices were skyrocketing.
Everyone wanted a piece of it.
It sounds kind of crazy looking back.
It was a wild time.
But of course, no boom lasts forever,
Yeah.
right? And then came 2008.
The financial crisis.
Yeah, it hit Dubai pretty hard. Harsh reality check for a market so reliant on global cash flow.
It exposed the vulnerabilities for sure.
And prices plummeted.
Yeah, the market took a nosedive.
But, Dubai's resilient.
Oh, incredible.
They bounced back, driven by Expo 2020
Yeah.
and that ambitious Dubai 2040 master plan.
Those are key, for sure.
So it seems like global forces play a huge role in Dubai's real estate.
It's all connected?
Global economics, oil prices.
Yeah, imagine Dubai's real estate as the speedboat out on the ocean.
Okay, I like that.
And those global economic currents, they're constantly pushing and pulling it.
Right.
And then you add oil prices into the mix, which are the lifeblood of the region.
Exactly.
So when oil prices rise, the whole economy benefits, and that flows into real estate.
It's like a ripple effect.
It is.
And then you have government policies, especially those related to foreign ownership. It's like they're steering the boat, right?
Oh, absolutely. Those open foreign ownership laws are a massive draw for investors.
It sets Dubai apart for sure.
Yeah, but like you said, it's not just about attracting investment, the government's role, through regulations, infrastructure spending. It can shape the whole market.
They can either create stability or make things really volatile.
Right, exactly. They can watch the boat.
It's interesting how important valuations become in a market like this, where transactions aren't always happening super quickly.
They're crucial.
They're like a compass for investors.
Yeah, because in a market where information isn't always readily available, valuations provide that snapshot, that benchmark.
It gives them something to go on.
Yeah, it fuels optimism or anxieties, especially when there's uncertainty in the air.
For sure.
It's like a gut check for the market.
Okay, let's switch gears a bit and talk about investment opportunities.
Good idea.
Our sources highlight three main categories: residential, commercial, and REITs.
The big three.
So where should we start?
Let's start with residential, kind of the entry point for a lot of investors.
Okay, makes sense.
And remember that boom and bust cycle we talked about?
Yeah.
It's really evident in Dubai's residential market. Imagine a graph with these peaks and valleys showing those dramatic price shifts.
Okay, I can see it.
So even with those ups and downs, Dubai's residential market, it's still attractive, right?
It is, but why? What makes it so appealing?
It's the potential for high rental yields and capital gains. That's the siren song.
Okay.
Dubai, it's a global city, a transient population.
People coming and going all the time.
Exactly. And they all need a place to stay, creating this constant demand for rentals.
Makes sense.
But of course, it's not all sunshine and roses.
Right. What are the risks?
Currency fluctuations, market volatility, you name it, it's all there.
So diversification is key.
Absolutely. Don't put all your eggs in one basket.
Now, Dubai sometimes gets this reputation for being, only for the super rich.
Yeah, I've heard that.
But our data on affordability, it paints a different picture.
It does.
If you compare Dubai's affordability today to, say, a decade ago, there's been a shift.
Interesting.
Lower mortgage rates, the required equity contributions. It's made property ownership more accessible, even with rising prices.
So it's not just for the ultra-wealthy anymore.
Not at all. Okay, let's move on to commercial real estate in Dubai. What makes this market different?
Things get really interesting here.
Oh, how so?
Dubai's commercial real estate, it operates at a faster pace.
Okay.
Think shorter leases, typically 1 to 3 years.
Oh, wow, that's short.
It is. And that means rents are way more sensitive to market swings.
So more volatile.
Exactly. It's a higher risk, higher reward kind of game.
So it attracts a certain type of investor.
It does. People who are comfortable riding the waves, because the reliance on market-determined rents means income can fluctuate.
Not for the faint of heart.
No, but on the flip side, in a controlled supply environment like Dubai, there's still great potential for capital appreciation.
I see. So the potential is still there.
It is. And don't forget the growing trend of green-rated buildings.
Yeah. Sustainability is huge now. How's that playing out in Dubai's commercial sector?
It's a big deal. Institutional investors, especially those focused on ESG, they're seeking out green-rated assets.
They want to invest responsibly.
Exactly. And this is pushing developers in Dubai to incorporate sustainable practices, obtain certifications like ELD.
So it makes their properties more appealing to a wider range of investors.
Exactly. It's a win-win.
You mentioned grade A office specifications earlier.
Yeah.
What does that even mean, and why should investors care?
Grade A offices, think of them as the gold standard, the top tier of commercial spaces.
The best of the best.
Exactly. They've got high-quality finishes, state-of-the-art amenities. They're in prime locations.
So they attract top-tier tenants.
They do, and that means higher rents and better long-term value.
A good investment, then.
Yeah, and a perfect example of this trend is the ICD Brookfield Place, a stunning development that's attracting a lot of attention.
So developers are responding to this demand for institutional-grade spaces.
They are.
It shows that Dubai is maturing.
For sure, it's not just about flashy structures anymore.
They're focused on meeting the needs of sophisticated investors.
Exactly.
Yeah.
Which is key to attracting long-term, stable capital.
All right, let's talk about REITs. How do they fit into the Dubai real estate puzzle?
REITs, or real estate investment trusts, offer a unique way to tap into the market without actually owning physical assets directly.
Okay.
Imagine a group of investors pooling their funds to purchase and manage a portfolio of properties.
Generating income through rents and potential appreciation.
Exactly.
It sounds like a good way to diversify your real estate portfolio.
It can be.
So who are some of the key players in the REIT space in Dubai?
Two big names come to mind, Emirates REIT and NBD REIT. Their stories really illustrate the potential, but also the complexities of the REIT market in Dubai.
We'll have to dive into those in part 2.
Definitely.
Before we wrap up this part, though, I want to touch on the practical side of things, like buying or leasing in Dubai. Are there any, insider tips or things we should be aware of?
Well, for starters, agents are crucial in Dubai's real estate market.
They are.
They're involved in pretty much every step, so finding a reputable one is key.
Like having a trusted guide?
Exactly. And our expert, Michael Waters, he emphasizes understanding the legal framework, particularly REA-RA.
What's REU?
REA-RA, the Real Estate Regulatory Agency, they're like the guardians of the market.
Okay.
They regulate everything, protect buyers and sellers, and they're trying to make the market more transparent.
So familiarizing yourself with REA's regulations is important.
It's crucial, like learning the rules of the game before you play.
So once you've found that dream property, you've agreed on the price, what's next?
You sign an MOU, a memorandum of understanding, with the seller.
And that outlines all the terms.
Everything. Purchase price, payment schedule, any special conditions, it's all in there.
Okay, and then the official transfer of ownership happens at the DLD, right?
That's right. That's where you pay the purchase price and all the associated fees.
Speaking of fees, what can buyers expect in Dubai?
Transparency is key. There are a few standard fees, like a transfer fee, usually 4% of the purchase price,
Okay.
and registration fees. Those vary depending on the property's value and type.
So factor those into your budget from the start.
Absolutely. No surprises.
Michael Waters also mentions a no objection certificate, or NOC.
Right. The NOC, think of it as a clearance document.
From the developer.
Yeah, or the relevant authority. It basically confirms there are no outstanding dues or objections to the transfer.
It ensures a clean title deed.
Exactly. Gives you peace of mind.
Now, switching to leasing, Michael Waters points out some key differences between Dubai's practices and those in, say, more established markets. What makes Dubai unique in that sense?
Well, as we mentioned earlier, the shorter lease durations, especially in the commercial sector, that's a hallmark of Dubai.
It reflects that fast-paced environment.
It does. And while it creates some uncertainty for tenants, it also speaks to the dynamism of the city.
It's a double-edged sword.
Kind of.
Anything else specific to leasing in Dubai?
The DLD's rental index is really important. It helps regulate rent increases.
Acts like a safety net for tenants.
It does, prevents landlords from just arbitrarily hiking rents.
So there are protections in place.
Yes, promotes fairness and stability.
What about lease termination?
Both landlords and tenants have clear rights and obligations when it comes to ending a lease.
So understanding those is important.
Crucial. It can help avoid disputes and legal battles.
So know your rights and responsibilities.
Exactly.
It's clear that Dubai's real estate market has its own rhythm, a mix of global influences and local regulations.
It's a unique blend.
But there's this exciting vision for the future, too. Dubai's smart city vision,
That's right. Dubai's not just building buildings, they're building the future.
where technology and sustainability are intertwined.
Exactly. It's going to redefine how we live, work, and invest in real estate.
That's a topic for part 3.
Definitely. Lots to unpack there.
We've covered a lot of ground in this part, from those early infrastructure projects to the rise of a city embracing innovation.
It's been a fascinating journey.
It has, and we hope this has equipped you with the knowledge to navigate this exciting market.
Remember, Dubai's real estate is dynamic. Staying informed is key.
Thanks for joining us on this deep dive into Dubai real estate.
Until next time.
Welcome back. In part 1, we went through Dubai's real estate history and the forces shaping its market. Now let's dive deeper into REITs, those investment vehicles that offer a unique way to tap into Dubai's property scene. You mentioned Emirates REIT and ENBD REIT as case studies. I'm all ears. Tell me more about their performance and what they reveal about the REIT landscape in Dubai.
Let's start with Emirates REIT. Picture this. It was founded in 2010, right at the cusp of Dubai's resurgence, and listed on Nasdaq Dubai in 2014. Today, they manage a diverse portfolio of 11 properties worth a cool $758 million US.
Wow, 11 properties. That's quite a collection. What kind of assets are we talking about? Are they all those glitzy skyscrapers Dubai is famous for?
Not exactly. Their portfolio is like a well-balanced meal, a mix of office spaces, retail hubs, and even educational properties. Think Index Tower in DIFC, that mixed-use development with offices, shops, and ample parking. They also have a strong presence in Dubai Internet City, with properties like Office Park and Building 24 catering to the tech-savvy crowd.
So a blend of commercial and educational spaces. It sounds like they're spreading their bets, diversifying their risk across different sectors.
Precisely. And let's not forget their community mall, Trident Grand Mall, nestled in the heart of Dubai Marina. These community malls are becoming increasingly popular, catering to the daily needs of residents in specific neighborhoods. It's all about convenience and a sense of community.
Makes sense. So how has Emirates REIT fared since they entered the scene? Have they been riding the waves of Dubai's growth?
Well, their share performance has been a bit of a roller coaster, mirroring the ups and downs of the overall market. Between 2011 and 2017, they were on a roll, delivering annual returns ranging from a steady 5% to an impressive 25%. However, they hit some headwinds in 2018 and 2019, with returns dipping into negative territory.
So even with a diversified portfolio, REITs aren't immune to market fluctuations. It's a reminder that every investment comes with its own set of risks.
Exactly. Investing in REITs requires more than just jumping on the bandwagon. You've got to understand the underlying market dynamics, the REIT's strategy, and be prepared for those inevitable bumps in the road.
Now let's shift our focus to ENBD REIT. They started as the Emirates Real Estate Fund before hitting the Nasdaq Dubai in 2017, right? What's their story?
Their journey highlights some of the challenges REITs can face in a market as dynamic as Dubai. While they enjoyed solid returns before going public, their performance after listing has been, well, less than stellar.
Oh. What kind of challenges did they run into? Was it just the market taking a downturn, or was there more to it?
It's a bit of a complex story. Their net asset value has taken a significant hit since 2017, dropping by a whopping 44%. That's a major red flag for investors, raising concerns about liquidity and confidence. They've even considered going private again to address these issues.
A 44% drop. That's a serious blow. What factors contributed to this decline? Was it just bad timing, or were there underlying issues with their strategy?
It was a perfect storm, really. Their portfolio was heavily concentrated in commercial properties, just as that sector started to soften. Remember those short-term leases we talked about? They can make commercial properties more vulnerable to market swings. On top of that, There were concerns about their management structure, which further eroded investor confidence.
So, portfolio composition and market timing can make or break a REIT's success. It's not just about picking any REITs, it's about understanding their approach and aligning it with your own investment goals.
Absolutely. Due diligence is paramount. You've got to scrutinize the REIT's management team, their portfolio strategy, and their track record. Don't just buy into the hype, look under the hood.
Okay, so E&BD REITs face some serious challenges. What steps have they taken to course correct? Have they just thrown in the towel, or are they adapting to this evolving market?
They're not giving up. They've shifted gears, moving away from that heavy reliance on commercial properties. Their new focus is on alternative asset classes like logistics and healthcare, which tend to offer longer leases and more stable income streams. It's a smart move, reflecting a broader trend in the global REIT market.
It makes sense. Those sectors are driven by more fundamental needs. People will always need healthcare, and goods will always need to be transported, making them less susceptible to those economic ups and downs. But I find it interesting that ENBD REIT also hold a chunk of residential properties in areas like Remram and Dubailand. Aren't those areas known for more affordable housing options?
You're right. It's a strategic move to tap into the growing demand for affordable housing in those up-and-coming communities. Remember, Dubai is not just a playground for the wealthy. It's a city with a diverse population and a wide range of housing needs.
So even within the REIT space, there's a spectrum of opportunities, from those high-end commercial spaces to more affordable residential developments. That's valuable insight for investors looking to diversify their portfolios.
Exactly. REITs offer a gateway to participate in various segments of the Dubai real estate market, providing liquidity and diversification benefits. But always remember, thorough research and a solid understanding of the market are your best allies.
All right, before we move on, I'm curious about the specifics of buying or leasing property in Dubai. Are there any insider tips or things we should be aware of?
Absolutely. Agents play a crucial role in Dubai's real estate market. They're involved in almost every step of the buying and selling process, so choosing a reputable agent with a deep understanding of the market is essential. It's like having a trusted guide in a sometimes complex landscape.
And our expert, Michael Waters, emphasizes the importance of understanding the legal framework governing real estate transactions in Dubai. He specifically mentions RARA. Can you shed some light on that?
RRA, the Real Estate Regulatory Agency, is like the guardian of the market. They regulate everything, protect the interests of both buyers and sellers, and strive to make the market more transparent. Familiarizing yourself with RRA's regulations and procedures is crucial for a smooth and hassle-free transaction. Think of it as learning the rules of the game before you start playing.
So Dubai has put effort into creating a structured and regulated real estate environment. That's reassuring for investors. What about the nitty-gritty of the buying process? What are the key steps involved?
Once you've found your dream property and agreed on a price, you'll sign a Memorandum of Understanding, or MOU, with the seller. This document outlines all the key terms, like the purchase price, payment schedule, and any special conditions. Then you'll move on to the official transfer of ownership at the DLD. This is where you'll pay the purchase price and all those associated fees.
Speaking of fees, what kind of costs can buyers expect in Dubai? Are there any hidden surprises?
Transparency is key, right? There are a few standard fees, including a transfer fee, typically 4% of the purchase price, and registration fees, which vary depending on the property's value and type. It's crucial to factor these costs into your budget from the get-go to avoid any sticker shock later on.
So no surprises, just good planning. Michael Waters also mentions a no objection certificate, or NOC. What's that all about?
Think of the NOC as a green light, a clearance document from the developer or the relevant authority. It confirms that there are no outstanding dues or objections to the transfer of ownership. It's a crucial step in ensuring a clean title deed, giving you peace of mind.
It's like that final check, making sure everything is in order before you seal the deal. Now let's switch gears and talk about leasing. Michael Waters highlights some key differences between Dubai's leasing practices and those in more established markets. What are some of the things that make Dubai unique?
As we touched upon earlier, those shorter lease durations, especially in the commercial sector, are a hallmark of Dubai's fast-paced market. While this can create some uncertainty for tenants seeking long-term stability, it also reflects the dynamism of the city.
It does add a layer of complexity for those who like to plan ahead. Are there any other aspects of leasing that are specific to Dubai? Any rules or regulations that tenants should be aware of?
Yes. The DLD's rental index plays a crucial role in keeping rent increases in check. It acts as a guideline, preventing landlords from arbitrarily hiking rents. This adds a layer of protection for tenants, promoting fairness and stability in the rental market.
So there are measures in place to prevent those rent spikes that can make city living so challenging. What about lease termination? Are there specific provisions that tenants should be aware of?
Absolutely. Both landlords and tenants have clearly defined rights and obligations when it comes to ending a lease. Understanding these provisions can help avoid disputes and potentially costly legal battles. It's all about knowing your rights and responsibilities.
Well, we've covered a lot of ground in part two, from the performance of specific REITs to the ins and outs of buying and leasing property in Dubai. It's clear that this market has its own unique rhythm, a blend of global influences and local regulations. But there's one more exciting topic we need to explore: Dubai's smart city vision and its potential impact on the future of real estate.
That's right. Dubai is not just building physical structures, they're building a future where technology and sustainability are interwoven into the fabric of the city. It's a vision that's set to redefine how we live, work, and invest in real estate.
That sounds incredibly intriguing. Let's dive into those implications in part three of our deep dive. Stay tuned. Welcome back to the final part of our Dubai real estate deep dive.
It's been quite a journey, right?
It has. We've explored the market's history, its quirks, delved into REITs, and now we're stepping into the future. Dubai's smart city vision.
It's ambitious.
It sounds like something straight out of a sci-fi movie.
It's happening right now, though.
I know, it's crazy. So how will this vision impact the real estate landscape, like practically? Will we have flying cars zipping between buildings? Robots managing properties?
Maybe not flying cars just yet.
Okay, good.
But the changes will be very real, imagine, like stepping into a smart home that optimizes its energy consumption based on your habits.
Go.
It adjusts the temperature, the lighting, even anticipates your needs.
Wow.
And it connects seamlessly to city services.
So it's not just a home, it's part of this like interconnected system.
Exactly. And think about office buildings that adjust their environment based on occupancy
Maximizing efficiency.
and comfort,
So buildings become more responsive.
almost like living organisms, yeah.
And with autonomous vehicles, how will that change things?
Potentially huge shifts in urban design, less need for parking garages could free up prime real estate for, say, parks, community centers, or even mixed-use developments.
So many possibilities.
Right. It opens up a whole new world of options.
And data. How will data play into all of this? Will we have access to real-time information about everything happening in the city?
Dubai is already heading in that direction. They're creating open data platforms with insights into market trends, infrastructure usage, even social sentiment.
Yeah, it's incredible.
Imagine that level of transparency and insight. It empowers everyone, investors, developers.
Make smarter decisions.
Exactly, leading to more efficient development.
What about sustainability?
Sustainability is fundamental to this vision. We're already seeing the push for LEED certifications, but the smart city approach takes it further.
In what way?
Imagine buildings generating their own energy, efficiently managing waste, contributing to a circular economy.
That's impressive. A city that's not just smart, but also responsible.
It's the goal.
But there must be challenges too, right? What hurdles might Dubai face in realizing this vision?
One of the biggest is ensuring equitable access to technology. Bridging the digital divide is crucial to creating a truly inclusive smart city.
It can't just benefit a select few.
Exactly. Everyone needs to be able to participate and thrive.
And with so much reliance on technology, cybersecurity must be a huge concern, right?
Absolutely. Protecting critical infrastructure and data is an ongoing battle.
How do they plan to address that?
They need robust cybersecurity measures, continuous investment. It's like building a fortress around your digital city.
It's a lot to consider.
It is, but the potential rewards are enormous.
I'm also curious about how these technological advancements will impact property values and investment strategies. Will investors be looking for different things in a smart city?
Most likely, we'll see a premium on properties integrated into that smart city ecosystem, energy-efficient homes, buildings with advanced connectivity, locations near autonomous transportation networks.
So location takes on a new meaning.
It does. Investors need to adapt their strategies to consider these new factors.
This has been an incredible journey. We've explored the past, present, and future of Dubai's real estate.
From those early infrastructure projects to the rise of a city embracing innovation and sustainability.
We've covered it all. The dynamics, the REITs, even glimpsed into that smart city future.
Dubai is constantly pushing the boundaries of what's possible.
It's a dynamic market, constantly evolving.
Staying informed is key.
Well, we hope this deep dive has equipped you with the knowledge and insights to navigate this exciting market.
Thanks for joining us.
Until next time, keep exploring, stay curious, and remember, the future is just around the corner.